Hello everyone, I'm Zahra Fatima. Welcome to my channel. Students, today in this video I'm going to explain you a new subject, financial management. The subject financial management is having by the students of MBA semester 2 students of Osmania University, MCOM students, BBA students and even CA students also having a subject financial management. So this video is helpful for all. So students, watch the video till the end. Don't skip the video. If you skip the video, you will not understand the concept clearly. Students, for understanding any subject, you must have the command on its basics. So in this video, I am going to explain you the subject financial management from its basics because this is my first lecture on financial management. And in this video, I am covering the financial management unit 1 and only theoretical part I will explain you in this video. In my coming videos, I will explain you the problems also. So in this video, I am covering unit 1. On screen, you can see what topics I am going to explain you in this video. Meaning, definition, nature, scope and functions of financial management. So in this video, we will study the meaning, definition, nature, scope and functions of financial management. So students, watch the video with full concentration. Students, financial management. Previously you studied about management, accounting, financial accounting. Now the new subject is financial management. So on screen meaning is given. Financial management is that managerial activity which is mainly concerned with planning, raising and controlling of the firm's financial resources. Financial management was a branch of economics till 1980. Later on it was developed as a new subject. So students, financial management is a managerial activity. So financial management is a combination of two words, financial and management. What is management? You already studied previously. Management is concerned with planning, organizing, controlling so that the ultimate objective of the organization can be achieved. Now in this we are studying about financial management. What is financial? Financial is nothing but finance. So financial management. So under financial management we are studying about managing the firm's financial resources. So financial management is a managerial activity. It is concerned with planning, raising and controlling the firm's financial resources. So it was developed into a separate subject. Earlier it was known as corporation finance and managerial finance. After 1950, due to the environmental changes like increase in competition, changes in technology, innovation, industrialization, financial management is emerged as a separate subject. So students, previously financial management was a branch of economics. It has no separate subject. So previously it was a branch of economics and previously it was known with the term corporation finance and managerial finance. But after 1950s, early in the 20th century, early part of 20th century, due to environmental changes, due to increase in competition, changes in technology, innovation, industrialization, the subject financial management comes into a separate subject. Previously it was a branch of economics, now it has a separate subject. It comes into existence because of so many changes, because of increase in environmental changes, increase in competition, changes in technology, increase in the size of business organization. So the subject financial management has a separate subject for the study. So financial management is concerned with raising, controlling the firm's financial resources. Now we have different definitions on the subject financial management. Now definition 1, Gothman and Dougal. So according to them, financial management is the activity concerned with planning, raising, controlling and administering of funds used in the business. So Gottman defines financial management is the activity. It is concerned with planning, raising, controlling and administering of funds used in the business. So he said it is an activity, it is concerned with planning. Before raising the fund, a firm, a manager must plan for raising the funds. Now, according to Wheeler, that business activity which is concerned with the acquisition and conversion of funds in meeting the financial needs and overall objective of business enterprise. So, according to Wheeler, he described financial management is a business activity. It is concerned with acquisition, conversion of capital funds to meeting the financial needs and overall objectives of the business. So students, financial management is concerned with acquisition of funds and conversion of funds in capital funds, conversion of capital funds in meeting the financial objectives to achieve the objectives of the organization, business organization. So these two are the definitions we are taken from two authors. One is Gottman and Dougal and second one is Wheeler. So for understanding the concept clearly, we see the definitions. Now from the above definitions, it is clear that financial management is concerned with proper and efficient utilization of funds from its inception to its growth and expansion, and some cases to its winding up also. So students, it is clear that financial management is only concerned with the financial resources of the business. So it is concerned with proper and effective utilization of funds from its inception to its growth and some cases to its winding up also. Students, funds is required from its inception, and for the growth of the firm also we need the finance, and even at the time of winding up also we need the finance. So finance plays a very important role in the business, because other activities of the business like production activity, sales, marketing activities, HR department and technological department, every department is depends on the finance department. Now on screen you can see the nature and scope of financial management. What is the nature and scope of financial management? Finance is the lifeblood. Underline these words, students. Finance is the lifeblood and nerve center of a business. Just as circulation of blood is essential in the human body for maintaining life, finance is very essential for smooth running of the business. So students, finance is the lifeblood and nerve center of the business. Just like circulation of blood is essential in the human body, like that finance is also plays a very important role in the business. Finance, production and sales are the three important aspects of business. But out of the three, finance is most important. Without finance, the other aspects, production and sales, will not be possible. Therefore, financial manager plays a very important role in raising of funds and effective utilization of funds so that overall objectives of business will be achieved. So students, in business we have different aspects, different activities: production, sales, marketing department, HR department, research and development department. So every department, it's depends on finance department, because without finance no production will be, there will be no production. Without finance there will be no sale. Without finance there will be no marketing department. Without finance it is not possible to run HR department, research and development department. So every department depends on finance department. So finance department is handled by the financial manager. So financial manager plays a very important role because he is the person who is responsible for all the financial affairs of the business. So it is the responsibility, it is the role of financial manager to plan the financial resources, to organize the financial resources and effectively utilization of the financial resources of the business, so that the ultimate objective is maximize the shareholders wealth will be achieved. So this is the meaning, nature and scope of financial management. I hope all of you understand now the meaning, the nature, the scope of financial management. Just now I explained you. Now the next is financial management decisions. Financial management decisions are also known as financial management functions, and financial manager has to take a number of decisions. Under that we have three major and important decisions. The three major important decisions are: number 1, investment decision; number 2, financing decisions; number 3, dividend decisions. So these three are the major and important decisions which are to be taken by the financial manager to achieve the ultimate objective of the organization. Now, the first decision is investment decision. The second decision is financing decision, and the third decision is dividend decision. Students, in the examination, in short, the examiner will ask you financial decisions separately, investment decisions and dividend decisions also. So financial management, every organization needs finance. The functions of finance are useful for organization. The successful running of a business totally depend upon the financial management. Therefore, decisions related to finance are considered as financial decisions. So students, decisions are also known as financial decisions in order to maximize shareholders' wealth. A firm makes a various financial decisions. See students, the ultimate objective of the organization, of the business enterprise, is to maximize the shareholders' wealth. So this is the objective a financial manager should consider before taking any decisions. The ultimate objective is to maximize the shareholders' wealth. So for maximizing the shareholders' wealth, a financial manager has to take number of decisions. Under that, now we are discussing three major decisions. The number 1, financial decision. On screen you can see what is financial decision. Financial decisions, under that the first one is investment decision. The investment decision is basically concerned with the allocation of funds among both long-term assets and short-term assets. The investment decision can be classified into two groups: long-term investment decisions and short-term investment decisions. Students, the first and most crucial decision is investment decision. Here the management has to decide allocation of financial resources both in long-term asset as well as short-term assets. So investment decisions can be classified as long-term investment decisions and short-term investment decisions. Now on screen you can see first long-term investment decisions is concerned with the investment of current funds. Mark this point students, investment of current funds most efficiently in the long-term assets or fixed assets in anticipation of an expected flow of benefits over a series of years, and it is relatively benefits and returns associated with it. The capital budgeting technique is applied for taking the long-term investment decisions. Long-term investment decisions is also known as capital budgeting decisions. So students, long-term investment decisions. Long-term investment decision means it is the decision where the financial manager has to decide how much of the current funds should be invested in acquisition of long-term assets. Long-term assets is also known as fixed assets. Now, short-term investment decision. Short-term investment decisions are those decisions which involve distribution of funds among cash, among receivables, among inventory. Therefore, short-term investment decisions are also known as working capital management. A good working capital management policy makes sure that decisions taken have high profitability and appropriate liquidity. So students, long-term investment decisions consist of two types of decisions. Investment decisions consist of two types of decisions: long-term investment decisions and short-term investment decisions. Long-term investment decisions means where the manager has to see how much fund he should invest in acquisition of fixed assets. So for a long-term investment decision, a technique is applied that is called capital budgeting technique. So long-term decision is also known as capital budgeting decisions. Now on screen you can see short-term investment decisions. Short-term investment decisions is also known as working capital management decisions. So here in short-term investment, a manager has to see how much fund should be kept as a cash and how much amount should be kept in receivables. Receivables is also known as debtors, and how much of the fund should be blocked in inventory. So these type of decision a manager has to take in short term investment decision, so that the decision will be in return high profitability and appropriate liquidity to the organization. So these are the very important decisions of financial management. Now on screen you can see the next decision, that is financing decision. The second major decision involved in financial management is the financing decisions. After making the investment of decision, firm need to take financial decision to finance the new asset. It is concerned with financing mix or capital structure. Financial manager must choose suitable source of fund which develops an optimum capital structure so that it will maximize shareholders' wealth. So students, the first decision is investment decisions. Once the manager has taken investment decision, the second and major most important decision is financing decision. Once the investment decision is taken, next decision is financing decision. Financing decision means from which source the investment decision should be financed, from which source of finance should be selected. So this financing decision is also called as financing mix or capital structure decision. So here manager has to plan in such a way he has to raise the funds so that the ultimate objective of maximizing shareholders' wealth can be achieved. These financing decisions are also called as financing mix or capital structure decisions. So students, financial decisions, under that first we studied about investment decisions. Investment decisions consist of two types: long-term investment decisions and short-term investment decisions. Now the second major important decisions of financial management is financing decisions. Now on screen you can see the third decision, that is called dividend decision. The third major decision of financial management is decision relating to dividend policy. What is dividend? Dividend is that portion of earnings is also called as profits, which is distributed among shareholders. The dividend decision involves the determination of the percentage of profit earned by a firm to be paid its shareholders, and how much of the percentage of profit should be retained in the business. So students, the third and major important decision is dividend decision. What is dividend? Dividend is that portion of earning profit which we have to distribute among the shareholders. So how much of the amount, how much of percentage of profit should be distributed among the shareholders, and how much of the percentage of profit should be retained in the business. So this decision is to be taken by the financial manager very carefully. So whether to distribute all the profits or retain them, or combination of both, be seen from the angle of its impact on the shareholders' wealth. The optimum dividend policy is one which maximizes the market value of the share. So students, under dividend decision, a manager has to consider how much of the profit should be distributed among its shareholders as a dividend, and how much of profit should be retained in the business. So he has to consider both the aspects, how much he has to distribute and how much he should be retained in the business, so that the ultimate objective, what is the ultimate objective? The ultimate objective is to maximize the shareholders' wealth. So whatever decision a manager will take, he should consider in the mind that the ultimate objective for maximizing the shareholders' wealth will be achieved. So students, in this video I explained you what is financial management, its meaning, definition, nature and scope, and what are the different financial management decisions. So I hope all of you understand now the concept of financial management, its meaning, definition, nature and scope, and major financial decisions. So in this video I covered meaning, definition, nature and scope, and decisions of financial management. In my coming video I will explain you the different approaches to financial management and what are the objectives of financial management. In my coming videos I will explain you, and in my coming videos I will explain you the problems also. So students, if you satisfied with my lecture, then give a like. If you think this video is helpful for your friends also, then share the video with all your friends. And for my coming videos, subscribe to my channel. And if you are new to my channel, if you not subscribe my channel, please subscribe the channel, so that future notifications related to your academic information, related to your future academic information, related to the lectures about your all subjects, notifications will come to you directly. So students, inform your friends about the channel, about the videos, and about the upcoming videos also. And on my YouTube channel I already uploaded 2 videos on the important questions subject financial management and business law and ethics. So students, visit there, see the videos, like the videos, and share the videos with all your friends, so that it helps to you and your friends for the preparation. Students, thanks for watching the video. Stay connected with us.